Hello and welcome to another exciting episode of the Wirex Crypto Podcast. Today, we're tackling a topic that's been on everyone's radar, stablecoins, and their growing influence on global payments. With the promise of faster, cheaper, and borderless transactions, stablecoins are positioning themselves as the future of how we move money across the globe. But with all these advantages, what's at stake as we navigate this new frontier? Joining us today is Daniel Lee, head of Web3 at Banking Circle. Daniel has a front row seat to all things Web3 and financial innovation, and he's here to break down the key opportunities and risks that comes with the rise of stablecoins. Daniel, thanks for being here, and we're really looking forward to this conversation.
Hi, good to meet you.
Hi, great. So let's get to it. Stablecoins have been called the future of global payments. What's the main reason people think they'll replace traditional systems like banks or credit cards?
I think that we have to look at it from a more pragmatic approach, right? I don't really think that in the immediate future, stablecoin is just going to replace traditional systems. If we go back a bit into history, you will see that there were a lot of talks 20 years ago that e-money, digital payments is going to replace traditional rails. But then we had e-money, we had QR code payments, but it doesn't replace cash, for example, right? So I think that stablecoins would play a significant role, but it'll be complementary as opposed to replacing traditional system, at least in the near future.
And you know, when markets get volatile, the stability of stablecoins is put to the test, right? What measures need to be in place to make sure they stay reliable, especially in times of crisis?
So I think the reserve management of stablecoins become very important. So like for example, when we designed Wirex, our own stablecoin, we try to make the reserve management as liquid and as safe as possible. So for example, you could have a stablecoin in a very secure bankruptcy remote structure. But if you take the stable coins and you buy securities with it, when there is a big redemption, you could actually have a time delay in order to do the conversion back to fiat. So there would be some liquidity problem as well. So you need to address both the safety and liquidity in terms of the reserves to give confidence. So the example that I'll give is how we do reserve management for Wirex. So that would actually prevent any speculation about concerns on the reserve, which would lead to volatility.
Yeah, trust is such a huge thing, right? And there's a lot of hype around stablecoins. But are there any hidden risks in relying too much on them for payments? And is there a downside we're not talking enough about?
Well, as you know, there are many types of stable coins, right? There are stable coins that are fully replicated. There are stable coins that are backed by other types of assets other than the underlying fiat. So you could work like an asset reference token where the backing of that stable coin could be some other reserves. It could be a commodity or it could be some even crypto assets. So in those cases, the risk of using that stablecoin would be different from using a stablecoin that is one for one back. So I would think that this would be the same as when ETF first came out. You would be looking at, you cannot look at them as just a homogeneous product. But in ETF, you have those that are fully replicated, those are partially replicated, and those that are synthetically replicated. And the risk difference across the different types is very much similar when it comes to stablecoins. The risk differs from the way that stablecoin is actually constructed, and therefore one of the most important things is to understand what type of stable coins you are using, how safe is the reserves, and how sure you can be of the redemption of that stable coin.
Yeah, it feels like, there's a lot to take in and to consider, right? But how do stable coins actually help people in developing countries or unbanked populations? Are they truly making financial inclusion a reality, or is it a buzzword?
No, I think the use of stable coins to help unbanked actually enables them to do a lot of banking services which they previously had no access to. So I think it's really real. It's something that you can actually help a lot of users. I've spoken to some projects where, for example, in countries, there would be people that go to work about a few hundred kilometers away from the hometown. But what happens is when they need to send back money to their parents, it's very difficult because the parents would not have a bank account. What they did then would be you have to take cash and you have to trust somebody to actually bring that cash back to that village for you. And many times, the person that's carrying the cash would abscond, etc. But there are projects that have actually solved this problem using tokenized money, using blockchain technology to actually enable those payments to grow across on very basic infrastructure on phones. So you don't really need a too sophisticated type smartphone even to enable that. But because stablecoin in the form of a tokenized money allows that transfer to occur, it actually solves a lot of these problems.
And it's a bit safer,
Yeah, it's definitely a lot safer. But of course, there are still pain points to solve. Like, for example, after the guy received the stablecoin, there must be a center that the person can go to actually redeem it back to fiat.
Right. I mean, I think we've come a long way, right? From that time of just having only cash and we can only deal in cash. How much power do crypto exchanges and fintech companies have in shaping the future of stablecoins and global payments? Could they end up being the biggest gatekeepers?
Well, I think currently the largest use case of stablecoins has still been the use as a medium of exchange in transactions. So that is the reason why a lot of crypto exchange are the largest users of stablecoins. But there is actually a lot more use cases for stablecoins. For example, for settlement, you could use it for traditional settlements, whether it's for settlements of commodities, derivatives, margin top-ups, so on and so forth. But that space has not really grown up yet. Has not grown yet. Stablecoins could also be used to resolve a lot of trade finance need for escrow. So, for example, you could actually put stablecoins into a wallet, and the buyer and seller both holds on to the key to move that money. And it's only upon delivering the delivery of a specific good would that stablecoin be moved out. And that actually solved a lot of issues with escrow in trade finance. But a lot of this use case is still in its infancy. So that's the reason why we start to see that the exchanges currently has a lot of are the biggest users of stablecoin, and therefore it looks like they could be the gatekeepers. They could be the one that have the largest exposure to stablecoin. But I believe that as the other use cases of stablecoin grow, you would see different types of financial institution having a stake in this space as well.
That's interesting. And when it comes to managing stablecoins, who should have the final say? The issuers, regulators, or the communities using them? And then, what's the right balance of power?
So I think everyone you mentioned would be a stakeholder in the use of a stable coin, right? But it's very important for a regulator to actually set the tone, to set the policy statements, so that if you want institution adoption and financial institution to come to this space, there are guardrails that they can operate within. So the regulators must set these parameters. Otherwise, for a financial institution, they would not know exactly what they need to do to comply. Because you could be the best in class, but it doesn't mean anything if there's no regulatory framework or guardrails that you are actually operating with. So I think that is one very important thing. So, but for the other users, in terms of the issuers, the actual users of the stablecoin, they would be very important in shaping the use case of stablecoins. So there would be a role that a lot of people play. So regulators would set the tone, but the other stakeholders would actually define what are the use cases that can be done using stablecoins. And I think the more regulated a stablecoin is, then the more financial institutions can adopt it for various usage.
But then, with that, what about will it limit the use case? When you have too much regulation in that sense.
Well, I actually don't think that when there's too much regulation, it necessarily reduces the use case. In fact, with a lot more regulation, you actually have, it gives the financial institution a lot more comfort to come into this space to actually use tokenized money. And I think that, at this space, at this time, the crypto asset community may be large. It's a few trillion, but that amount does not compare to the size of the whole traditional financial markets. Gold is already more than 10 trillion. Your equities is more than 100 trillion. Your fixed income is more than 100 trillion, right? So in order to bring in a lot more participants from all these different traditional financial institutions, you need a product that is actually recognized by the regulator and it's also considered highly regulated.
Yeah, I guess, it's it would make navigating the space a lot easier, when you know which direction you can go, right?
Right. And I also think, sorry, I also think that, the regulation actually would translate to investors' protection, which actually would in turn results in more adoption.
Yeah, and I think it would help with the ecosystem, and like you said, it would help with the adoption because there will be more trust, and this would really dispel the whole notion of the argument that people have with regulators, right? What's the most unexpected way you think stablecoins could disrupt the global payments landscape? Is there a sector or an industry that's flying under the radar, you think?
Yeah, I think what will happen is that it would make the payment industry a lot more efficient. So things like cross-border payments, various new ways of making payments a lot more efficient, you would see it with the use of stablecoins going forward. Especially when you have stablecoins that are a lot more regulated, you have the trust to be able to use it efficiently. It can become a very powerful medium of transfer, for example, in cross-border payments.
Yeah, and the one thing that keeps coming to me is trust, and trust is really important, especially in this new world that we're living in, right? People are still skeptical about using stablecoins. What's the one thing that could happen right now to shift public perception and get people to trust more?
Well, I think regulation is actually playing a very big part. So, I mean, as regulations develop, you'll start to see more and more investors' protection, and that would lead to a lot more adoption, right? So you can see this in various type of products. Even if you look at equities, so like say for example in Singapore, the laws regulating equities only came in around 1986. So right up to 1985, trading of equities were actually based on just bylaws of the exchange. So it's just a contract between the exchange and its members, right? It's not actually a statute that's passed in Parliament. But those kind of regulations only came into play around 1986. And then subsequently, it developed into the Securities Futures Act in Singapore. And you could see from that time, the growth and adoption of trading in equities actually grew with the implementation of various regulations, because it brings in investors protection, and it also allows more institutional adoption. And you will see that asset class growing. So I think you will see the same thing in this space as well. As you see more investors protection being comes in from regulations, you start to see more clarity because of the regulatory guardrails, which allows financial institutions to adopt it more. That's when you see a lot more growth.
Yeah, there'll be more confidence as well, right? Of
Correct.
the space.
Yeah.
And if you had to pick one thing that will change the game for stablecoins in the next 5 years, what would it be? And where do you think the biggest surprises will come from?
Well, I think the most important thing there would be some sort of harmonization of regulations globally. I mean, the main thing about tokenized money is that it's something that is very global. It can be used anywhere in the world. But most regulations in any jurisdiction is very jurisdiction specific. So if at least the main jurisdiction harmonize the way they actually deal with regulating this and have some sort of a mutual recognition of each jurisdiction, that could actually mean that the institutional adoption of this kind of coins could grow a lot faster.
And final question, is there anything else you'd like to add, Daniel?
Well, I think this is a very exciting place, and you start to see that with the growth in real-world asset tokenization, the need for tokenized money, including stable coins, will grow with that. Because when you have asset being tokenized as on a blockchain, your settlement of those assets will require some sort of tokenized money as well. Because otherwise you will not get atomic settlement. Your settlement would still be free of payment because you are paying it with traditional system for a digital asset that's moving on blockchain. So I think with the growth in the real world asset tokenization trend, which we are seeing now, it will also translate to a growth in tokenized money.
Yeah, it's definitely fascinating to watch and observe. Daniel, your insights into how stablecoins could reshape financial systems while navigating hurdles like regulation and market stability were eye-opening. Thank you so much for being here.
Thank you.
And to all our listeners, we hope you found today's episode as thought-provoking as we did. We'd love to hear your perspectives. What do you think is the biggest challenge or opportunity with stablecoins right now? Hit us up on our social media and let's keep this conversation going.